to let people come in and filter through before we kick off what is set to be a very exciting session with the founder of TPP. All right, well, without further ado, hello Finimizers. Welcome to another Finimize Live. My name is Luke, your Finimize analyst, and I'm hosting today's event on accessible strategies for successful trading with our partner TPP. So just a few housekeeping rules to run through very briefly. As you're coming in, please fill out the poll. Nice and interactive. Also feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. This is the 15-minute discussion followed by a 15-minute audience Q&A. So while you're going along, post those exciting questions you have for Lane in the Q&A box to ask a question. And if you see a question you like from somebody else, upvote it so it moves to the top. And that way we can get through the most upvoted questions first. All right, well, let's kick this off. Our event partner for today is TPP, a platform that showcases experienced traders and their trading strategies, a market-beating investment. The strategies showcased have track records of outperforming their market benchmarks. The traders work on a remit of beating their market by a minimum of 1.5 times. There's no management fee, there's no performance fee. It's a simple subscription model. TPP empowers investors globally and assists them to beat their benchmark. And today we're very fortunate to have Lane Clark with us. Lane is TPP's co-founder and industry veteran who has operated for over 20 years in financial services. He has a plethora of experience operating in multiple roles, including a broker, trader, and a consultant to small hedge funds. He's traded billions of pounds in a variety of markets, including equities, derivatives, and commodities. And he's a market-beating trader who has combined with a fellow trader to form TPP. Their vision is to empower investors globally and assist them to outperform. So first things first, I hope you're well. How are you doing today, Lane?
Brilliant. No, thank you very much for having me. Super excited to be on this evening.
Fantastic. Well, without further ado, let's dive straight in, Lane. So I think what would be a great starting point would be maybe just providing a brief overview of how TPP all works from, opening the account to trades being initiated. So the floor is yours.
No, brilliant. Thanks for that. Well, look, you've done a great synopsis yourself there in regards to kind of what we've built. Just to add some further depth on that. So TPP showcases obviously what we would term elite market beating strategies. And they're working on that remit, as you quite rightly said, looking to achieve a minimum of 1.5 times their market benchmark. Now, in order to be showcased on TPP, these traders need a wealth of experience and need at least a minimum of 5-year track record before we will even consider showcasing them on TPP. So if they've beat their benchmark for 5 years, we will consider showcasing them. Reality is most traders on TPP have got a minimum of 10-year track record of beating their benchmark. And the data that you see on the actual TPP platform is live since they've been working with us. Now, am I okay to quickly show my screen share now to show a bit more about the mechanics?
Fantastic. Yeah, just show us that, make it a little bit more tangible for those seeing. Perfect, Lane.
Okay. Can you see that at the moment?
Yes, that's all good. We can see it.
Okay, perfect. So what we're looking at here, everybody, is the TPP dashboard. It's a leaderboard. Now, it showcases, obviously, all of our strategies, the returns that they've had since they've been live with us, and as well as that, obviously, the drawdowns. It's very, very transparent. Every single trade is captured on here, and all the statistics that anybody would ever want when assessing strategies is shown on our platform. Now, this particular one is worth looking at, and then we can talk about how you can utilize TPP. This one's called FTSE Market Trader. Now, since it's set up, it's above average on returns. It's been doing 37% per annum. But what's interesting to me is whether somebody starts with a 1 strategy portfolio or maybe has 4 strategies, FTSE Market Trader often features. Now, As an investor, if you're looking for successful strategies which are very accessible, I would come on something like this, look at obviously the returns it's been generating, but most importantly of all, looking at the risk. If you look at FTSE Market Trader, the max drawdown of 28.9% since it started with TPP. Now, bear in mind, this has been an incredibly volatile market climate, and a climate where I've also witnessed, obviously, the geopolitical tensions at the moment, but as well as that, obviously, the invasion of Ukraine by Russia. Now, if you're looking at FTSE Market Trader here, why this works very well for a one strategy portfolio, psychologically, is very easy to handle. Now, let's look at these returns here. Yes, they're very good, but occasionally they won't be quite as good as that. But what will be very consistent is the percentage of winning trades. I would know if somebody came into FTSE Market Trader, at the moment it's getting 78.5% of its trades right. I would know it's getting literally 8 out of every 10 trades right. Very easy to handle as an investor. Winning months, obviously 70% of winning months. So again, I would know if a client gives this time on FTSE Market Trader, they're going to get far more months right than they get wrong. Now, just staying on this before we talk about how one would build a portfolio, you can see here FTSE Market Trader started at a $30,000 portfolio amount and has grown to just under 80,000. It's about 77,000 at the moment. Now, the green line that you can see there is the S&P index. Now, when we set up TPP, a massive talking point in the markets was US tech. And look, it's a great sector to be in, but we wanted to show that TPP could outperform US tech, and that's why we've added the S&P line. Now, if anybody's ever looking at strategies and they want transparency, we provide every single trade that the traders have ever made since working with TPP. Occasionally, we will speak to the odd hedge fund manager, family office manager, and on here, we have every single statistic that any trader or hedge fund or family office manager would want. More importantly, how it works from an operation perspective. If I log into a particular client portfolio here, and I've asked permission for this, this is a chap called Richard Brown. He's actually a bloodstock agent, so he buys and sells horses for a living. Richard would come on here, he'd look at all the different strategies, he would decide what works best for him, and then he would start to build a portfolio. So I can actually dip into Richard's now to show you how the structures work. So we basically cater for investors from a starting level of £15,000. Sorry about that, guys, 1 second. From £15,000, and the average account size right now is about £125,000. But what we see is consistency in the actual trading strategies. So Rich is linked to 4 of our strategies. He started in January. He takes on more risk than our average client. But what you can see here is by diversifying your risk across TPP, you can build a portfolio that is robust, diversified, and we'd like to think performs regardless of the market climate. Now, I will caveat this straight away. Richard's performance is better than our average client because Richard takes on slightly more risk. But typically, if £100,000 might take 2 strategies or 3 strategies, even if you obviously took away one of those strategies or 2, you're still looking at a very good year. So yeah, as a brief overview, without going into the nitty-gritty of the actual details of the structures and how you build a portfolio, does that make sense, Luke?
Yeah, that definitely makes sense. And a client would just choose a strategy, and then that would be implemented on their platform, and it would basically mirror essentially what that professional trader, that strategy's doing. Am I correct in saying that, Lane?
No, you're 100% correct. What we've tried to build here is a market-beating vehicle. We're looking to bring strategies that consistently beat their benchmark and make them available to the masses. Our background, Ed and I, and you quite rightly give a nice synopsis earlier, but we've always been traders, but we've never worked with what we would term that everyday marketplace. I'd always worked with ultra high net worths. Ed's always worked with institutions. We share the frustration of investors globally where they feel that the performance they get from their fund managers isn't what it should be. So we built TPP purely to solve that problem in the marketplace. And yes, how it works is you choose your strategies, you subscribe to them on TPP, and then you link them with your brokerage account. Now, we have no loyalties to brokers. We're broker agnostic, but most of our investors work with interactive brokers. And the reason being, obviously, they've got over 150 billion under management. The costs of trading are very low, and ultimately the range of products very wide. So they choose their strategies on TPP, they link their strategies on TPP, and then, like you said, automatically, when our trader trades, the client's trade. And that's how it works. And that's how it's been scaling up since we set up.
Fantastic, Lane. Well, I think we are done with the sharing of your screen, and that's given us a great overview, and it leads us now into our next couple of questions. So I suppose, is this accessible to a global investor? If someone's based in the US, are they able to access this? Or, I don't know, somewhere like Germany, for instance?
It is, yeah. We set this up at first. Ed and I wanted to solve what we believe is a problem in the market. And at first, Ed and I didn't understand or know how to scale up a business. So what we did at first, we rolled it out to kind of friends and family, and really it just snowballed from there. So it reached a stage earlier this year where, as well as predominantly working in the UK, we'd spread into 15 different countries on the strength of our product and the referral system that's in place with our current clients. So obviously on the back of that, just to give you an idea on the business, if anybody's looking at TPP, at that stage, obviously things were building very quickly. We were getting a lot of positive momentum. We had a couple of VCs looking to invest into the business. And what Ed and I decided to do, we want to scale this up to assist investors like you. We decided that what we would do is do kind of a crowdfunding campaign. And we actually raised £1 million in 39 seconds. So ultimately, I know previously Monzo did it in 96 seconds. What I think that shows is credibility. Most of that funding came from our existing users. So on the back of that, we're now in a position where we can start scaling up. In those 15 countries that we operate in right now with a small footprint, we can start really working around the globe and really assisting these investors everywhere.
That's fantastic that you've got a global footprint and people from those countries can get involved. You spoke of a £15,000 minimum investment. Is that is that correct, Len? Yes.
Yeah, that is correct. Like I said, when we set this up, we wanted to assist the masses, but reality is we're not competing against the kind of do-it-yourself investment platforms where people maybe invest £500, £2,000. Most of our clients are coming from the traditional wealth managers, the fund managers, SJP, Jupiter Asset Management. And right now, the minimum entry criteria, quite rightly said, is £15,000. The average portfolio size with us is about £125,000. And we also have multiple accounts in the millions now as well. But yeah, what we look to do, we've provided that market-beating vehicle. We've stripped out what we would term as a stale and outdated fee structure. And at the same time, we're trying to allow it for investors from £15,000 all the way up to, like I said, multiple millions.
Fantastic. And I guess, Lane, how do you find, select the traders, the strategies for clients to invest in? Like, how do you sort of guide them towards that? And then we'll get more onto sort of a few tips and tricks that you've learned over the years, which I think will be very interesting for those listening.
Yeah, sure. So obviously from looking at the leaderboard, anybody who's been on there or might go on there afterwards, it isn't like we've got a vast quantity of strategies on there. We're very much focusing on quality rather than quantity. And I guess Ed and I, growing up in the world that we have, we appreciate that we're fortunate that the world we grew up in, the world we've always resided in, is a small space. If you think about the world of asset, finance as a whole, it's very large. The world of traders is far smaller. The world of successful market-beating traders, far smaller again. And Ed and I obviously have came from that world, and we know other people from that world. So when we set TPP up, it was almost a hard sell at first, but we were saying, look, guys, we could build a platform here that could outperform the markets, but we could also strip out the management fee, strip out the performance fee, and ultimately we could start to disrupt the industry and make a difference. So yeah, that's kind of what we've built and kind of why we've built it. And yeah, at the moment, it's obviously working very well for us.
Fantastic. Well, we're almost at the time to move into the Q&A. We've got a few more minutes here. So I guess one of the questions that maybe you've come across, which would be really interesting for those listening, is, what are some of the characteristics that these top traders possess to make them at this elite level?
Yeah, no, it's a great question, and I guess you touched on your last question as well. So the typical profile of a trader would be similar to kind of Ed and I, guys who've been in the industry for 15, 20, 22, 23 years, like Ed and I. And we've obviously showcased them, and what we tend to find is lots of them have a couple of traits which are very common across the board. One, good traders typically, in my opinion, always have patience. You have to be patient to consistently beat the market. And as well as that, I would say they have a high level of mental strength. There are many times over a period of a trading year where you will question your trades, you will question your decisions, and you will question your strategies. But if you have a strategy that you believe works, you have to persevere. I find when inexperienced traders sometimes go wrong, and this could be a lesson for all, they might have a strategy that works incredibly well, but they don't persevere because when the times get tough, the volatility becomes slightly too high for them and they start to change what they're doing. In my eyes, the chink there is the fact that they're taking on too much risk and therefore the volatility feels too high. And on the back of that, that's why they change what they're doing. So yeah, for me, a good trader is always patient and a good trader always has a high level of mental strength.
Fantastic. And then just before we move into the Q&A, Lane, I guess for any of those listening who might want to actually potentially pursue a career in trading at a buy-side firm like a hedge fund or at a bank, sell side, maybe prop desk, what sort of advice or tips would you give to someone who's wanting to go down that route?
Well, what I would definitely say is build that knowledge bank. I sometimes see these people online selling, learn how to trade in 6 hours, in 8 hours, in 12 hours. You know, I'll be frank, it isn't going to work. So what people should do is just like they do in every other industry, learn. So whether that's reading books, whether that's experiment in the markets with strategies, whether it's setting up small demo accounts at first, or even a small portfolio, learn, build experience, build knowledge, and then you can start building from there. But yeah, one thing I would say trading definitely isn't. It's not a get rich quick scheme. You can't learn to trade in the space of 4, 5, 6 hours, or even 5 weeks. It takes time like any other industry. But if you get it right and you can build a methodology that consistently beats the market, it's a brilliant industry to be in.
Fantastic. Well, we're going to move on to the Q&A now, Lane, and let the audience get their questions out to you. If you haven't asked a question yet, please remember to post in the Q&A box and upvote any questions you like. So we're going to start with a question from David. It's the most upvoted at the moment, and it asks, what level of experience with trading do you recommend to get started with TPP? Do you need to understand the underlying strategies before you get going?
Okay, so in regards to level of experience, we work with people relatively early in their investment journey. We also work with incredibly accomplished investors to family offices and hedge funds. So we are trying to cater for everyone. So as long as there's that general knowledge and understanding and some experience, then I would say obviously TPP works for you. In regards to the strategies, it really depends on what works for you as an investor. Some clients will come in here and they'll look at the strategies. They'll be looking at obviously the equity curve, the drawdowns. They'll see what could have obviously happened if they'd invested, 2 years ago, 3 years ago, and that's enough. Some will like to delve obviously into the statistics and look at other, ratios like the Sharpe ratio or the percentage of winning trades. It really depends on the individual investor. From our perspective, we try and provide everything. We provide the leaderboard as that first kind of touch point. We then provide, obviously, you click through to the strategy. You can see all the monthly returns. You can see, obviously, the chart. You can see how it's done against the S&P. And what I would say, I think it's worth mentioning. So our traders work on a remit, like we said earlier, of trying to achieve 1.5 times their market benchmark. We're not looking for heroes. We're not looking for people who make 50% on a monthly basis or over a quarter, because when people do that, typically they'll lose in the long run. So from our perspective, it's coming in here with realistic expectations. If I achieve 1.5 times my market benchmark, will I be happy with that? And I think the answer to that is generally yes. Now, if we achieve 1.8, 2.1, 2.4, like we've been doing since we set up, well, look, that's great. But come in with realistic expectations that you're looking to beat your benchmark whilst paying substantially less fees. And hopefully TPP will work well for you, provide the access to the type of strategies that possibly you've been looking for.
Well, that actually brings us to a great point, and it's come up by 2 separate people about the fee structure and how that works at TPP. So I think it would be a great touching point now to actually maybe just explain that and how it works.
Yeah, no, that is a really good question. I'm glad you asked, because if you look at obviously TPP, the original vision, it was to build that market beating vehicle. But Ed and I know in the industry like we do also wanted to change that, what we would term, and it's only our opinion, a stale and outdated wealth management model. And what I mean by that is, if you look at the typical fund, 150 billion under management, charging investors 1% per annum to manage that. Where is the incentive for that fund to outperform? Realistically, there isn't one. Flip side of that, if you look at a hedge fund who maybe weights far more towards performance fees, again, in our experience, if you're chasing performance fee, you're taking on too much risk, and generally that's when something will go wrong. So what Ed and I said is, look, it's quite clear we can build a market-beating vehicle here, but let's also disrupt that standard fee structure. So the only fee that exchanges hands on TPP is a subscription fee that can be turned on or off at any time. So our client pays our trader of the strategy a monthly subscription fee. It varies between $75 to $100, and it can be cancelled at any time. But ultimately, since we've set up, our client retention rate is 98.8%. Anybody who's worked with TPP still works with TPP, apart from obviously some situations that have maybe changed. So reality is, the subscription fee, in our opinion, works because the traders can't be complacent and live off the management fee. They can't take on too much risk chasing performance. Their remit is just to consistently outperform. And if they do that, in our eyes, they'll never lose an investor, and their book and our business will grow and grow and grow.
I think that's really interesting, Lane, what you guys are doing at TPP in terms of taking it away from the traditional models where maybe the incentives aren't aligned, or as you said, where there is a heavier weighting towards performance, you actually end up chasing too much risk to try and hit those performance targets to get your fees. We've got an interesting question from Dib here that asks, can this be done within a SIP or an ISA? Do you have any answer to that?
Yeah, at this stage, it can't be, and I'll explain why. If you look at SIPs, obviously they've been structured to provide more flexibility for investors. Reality is you're still incredibly restricted. Now, most SIPs will allow you to invest into listed funds, so a fund by Vanguard, by Fidelity. At TPP, our traders trade the products within the listed funds. So they trade listed products. So most of the activity on our strategies is global equities. And rather than trade the individual stocks, we typically trade the index. Now, we wouldn't spread bet. We wouldn't do CFDs. We don't think those investments are right for the everyday investor. So we purely trade listed investments. And it's like the FTSE 100, the DAX, the CAC. So going back to the question, listed products generally aren't eligible within the SIPs like a listed fund would be. But what we're doing is cutting out Fidelity, cutting out Vanguard, cutting out SJP, and trading those products directly. So no, most pensions wouldn't allow the listed products rather than listed funds. And on the back of that, it means at this stage, SIPs investment isn't eligible, and it's very similar for ISAs. Moving forward, obviously, we were focusing on what works for us. There's a big demand that from our current client base. So ultimately, it is something that we're looking at, but the actual strategies will be slightly different and they'll be tweaked somewhat.
Fantastic. Okay. Maxwell's got a question here about how do you verify and vet the traders that strategies appear on the platform?
Okay. So if you think about Ed and I as experienced traders, I would also think about us as the gatekeepers. So if somebody comes to us and says, look, Lane, look, Ed, I would like to be showcased on TPP. There are a number of hoops that they'll have to jump through. Firstly, we'll obviously chat to them, get to understand them, their experience, but then we'll ask to see their track record. Now, as I said earlier, that track record needs to be a minimum of 5 years for us to even enter those conversations. Now, if somebody turned around to us and said, well, actually, here's my 7-year track record, but I took a couple of months off when Russia invaded Ukraine, or I took 6 months off when COVID happened, we won't accept that. It has to be a full, unedited, live track record for us to even consider having a conversation. Now, if they get that far, and that will rule out the majority of traders, if they get that far, we will then put them onto our platform, but not make them available to the general public. We'll make sure they're 100% committed to our vision, to our concept, and make them trade off platform for a 2 to 3 month period. At that stage, if we're still happy with what they're doing and how the strategy is growing, we'll then enable it on the platform. Realistically, moving forward, I would expect that potentially more traders and slightly different strategies will be showcased. But right now, like I said, there's 25 strategies on there, all market beating strategies. And ultimately, most investors that we have typically we'll build a portfolio maximum 3, 4, 5 strategies.
And it's tilted towards global equity indices, Lane. There is a multi-asset availability in terms of asset classes, but you would say the bread and butter is the liquid global indices.
Yeah, it's one of them. If we're looking at the future, TPP are making a little bit of a noise in the industry at the moment. How could we make a bigger noise? Well, first, we obviously have to grow that client base, but as well as that, we then need to look at start building other products and diversification onto what we do. But there are no two ways about it. We're very good at what we do, and the small team of traders that we've got specialize in global equities. But what I would say, and it's on the theme of obviously trading strategies, global equities, but in numerous different ways. So what you can't see from looking at our platform, they're broke down into 3 distinct categories, and it provides a great level of diversification for clients. We have, what we would term as leverage trackers, small element of leverage, which is just like a wealth management portfolio. But if you believe the FTSE will go up 7% per year, why not have 2 times leverage and make 14% per year? Our second type of strategy is what we would term are long or flat, or buy or flat. And in very simple terms, if we're looking at a portfolio, maybe buy the FTSE at 7400, FTSE jumps up to 78, it might go flat, market neutral, wait for the markets to drop down to 75 and buy back in. That's our second type of strategy. And why we believe that works so well is because little tweaks and modifications to a portfolio like that take a portfolio that tracks a market to one that beats it consistently. And the third type of strategy is a slightly more active equity long short strategy. And although when you look at our platform, we're currently rebuilding our software, there are a variation of different strategies. You're exactly right. The majority of them trade in global equities, but like I said, they trade them in a number of different ways. And what we find with most clients, they come in, if they're at starter level, yes, they'll have one strategy. Maybe somebody with 50, 60,000 might have 2 strategies, further diversification. And as the portfolios get larger, 3, 4, 5, 6 strategies until they're incredibly diversified and robust, and obviously aim to perform regardless of the climate.
And does diversification, do you think that's the better way to go, Lane, in terms of like sort of mixing and matching a variety of strategies versus being concentrated in the top performing strategy for that month or something like that?
Yeah, I would say so. I'd always say to a client, you need to bear in mind, the more strategies that you have, the more subscription fees that you'll pay. But I think it's worth noting at this stage, if you look at our platform, the returns that you're looking at, we obviously looked at FTSE Market Trader, a net of subscription fees. So reality is, if the traders are quickly paying the subscription fees, it makes sense to be diversified. So if somebody came in and said to me, look, Lane, I've got £50,000, I want 4 strategies, it's probably a little bit more, too much diversification for them in regards to, having, 4 strategies, 4 subscription fees. But if the account size allows it, I would encourage it until it reaches a sweet spot where the larger portfolios might have 5 or 6 strategies. You don't need to have 8, 10, 12. All those accounts do is start to scale up the risk on a per strategy basis. So somebody could have 1.5 million, 6 strategies, but be trading them at maybe 400% each. Simple as that.
Fantastic. Okay, well, we've got a very quick question from Mike, who wants to know if this is open to Canadian residents at the current junction.
Yeah, well, at this stage, it really depends on, right now, we don't have any clients in Canada. That's one country we don't operate in, but it really depends on where Interactive operate and what the restrictions are. As an example, we had somebody recently who tried to link up from Australia, and I know the regulations in Australia wouldn't allow for the automated link up. So Canada isn't a country that we're in at the moment, but I'd happily make inquiries to the particular question and obviously reply to them. So at this stage, we don't have any clients in Canada, but something we could certainly explore.
And it's also something, Lane, that if there are any questions we can't get through today, you're more than happy to take any on via email. People can reach out to you via LinkedIn or contact you. But we still do have some time, so I want to get through these questions with you. Maxwell wants to know, where are the funds held?
Yeah, so when we set up, we didn't want to be the broker. Like there are other people out there who might provide the strategies and obviously the custodian of the capital. We wanted to align with obviously brokers globally. Originally, we started with Interactive Brokers, and we've worked with them ever since formation. So they hold the client capital. And we think, going back a few years when we set up, It just provided that extra layer of protection and credibility for the client. But from our perspective, it allows us to scale up quickly and globally, because somebody like Interactive can obviously cater for us in order to do that, because they already work globally. And as long as obviously they've got the facility to open an account there, they can work with us. So yeah, long-winded answer to where the fund's held, but they're held with obviously regulated brokers. And right now we're working with Interactive brokers. We're about to align with StoneX as well. We have a number of kind of what I would term retail brokers trying to align with us, where we're trying to stick with what I would term the slightly more institutional ones, because they share our mindset. They know if clients make money, if they keep their costs down, clients will send more money, clients will refer friends, clients will refer family. And that's why we work with who we work with.
Fantastic, Lane. Well, I'm going to ask two questions more and then we're going to wrap things up. The strategies, Andy asked, the strategies shown on the evaluation platform all appear to be trading in futures. Are there any strategies for regular fund trading?
They are, like I said, our traders, once we decide they can work with us, we basically design the remit that they can work on. So we will say, based on their track record, there's no point in trading anything that wasn't in their track record. You can trade these instruments, or you can do this, you can take this level of risk. But reality, like we said earlier, most are trading the global index trades, but there are some on there that are trading commodities. There are some on there that are trading FX. There are some on there trading individual stocks or funds, but the majority of it at the moment is global equities. But yes, our traders can trade anything, providing they've got the skill set and track record to back it up.
Fantastic. And then the last question I wanted to finish with, Lane, would be, are there any exciting new features that you may release down the line to whet people's appetites?
Yeah, I would say there are. So obviously, I guess what we've built is relatively new to the world, where people are consistently beating their benchmark and the results are there for all to see. But we're constantly looking at ways to make this a better business for our investors. So obviously that was the reason we've done our fundraise. We raised 1.4 million in total. And what that means is it can go from like a Lane and Ed entrepreneurial vision, concept, to hopefully a fast-growing fintech business. So we've added obviously the global regulation. We're currently rebuilding our new software. We're speaking to a couple of new traders to provide a bit more diversity. So it's definitely a case of watch this space, but there are some exciting developments to come.
Fantastic, Lane. Well, I'm sure the listeners and myself, I've learned a hell of a lot today, and I've found it incredibly interesting. And I wish I could chat all night, but that's all the time we have for today. So thank you for joining us, especially you, Lane. And I hope it's been enlightening and informative for all of you too.
No, really appreciate it. And one thing I would say to kind of wrap it up is, if anybody does want to contact us directly, feel free. Yes, we've built a market-beating vehicle, but at the same time, we've very much bolted on that personal service. We'll take the time out, explain the platform, provide demonstrations. You can do a demo account on there as well. So yeah, don't hesitate to reach out, whether it's via our website or whether it's via LinkedIn, where we've got quite a good following. It'd be an absolute pleasure to try and assist you to beat your market benchmark. Thank you very much for having me, guys.
Thanks. Cheers, everyone. Bye.